Happy New Year, everyone. Now, I hope everyone had a great time last night. I certainly did. I went out for drinks with friends, and now it's time to focus on the stock market again because the market is closed today, but I want to give you my analysis and make sure everyone makes money in 2025 going into 2026, and everyone can make money by knowing that the shit is about to hit the fan and we're gonna have a big bear market, which I posted in my last video, which you should watch with detailed analysis if you haven't watched it yet. And when I posted that video with the analysis, some people came out and thanked me and said, thanks for saving them money. And other people came out and said, I have no idea what I'm talking about and I'm full of crap. And when I said that the S&P 500 is going to fall by over 40% in 2025, they said that only World War III will cause that, okay? But if we fall from the very peak of 2024 down by 43%, you know what? We've only just fallen to the low of 2022. And the fact that people don't believe that we can just go back, we can't even go back in time to 2 years ago. The fact that people are so bullish about cryptocurrencies and artificial intelligence just shows how many people have piled into these investments and exactly why we are going to melt down, okay? And for anyone who doesn't believe what I'm saying, the price action is already indicating that we've started the bear market, okay? So in December, on Bitcoin monthly chart, we've already got an inverted hammer, which is a reversal pattern for those who understand technical analysis. On the NASDAQ 100, we also now have an inverted hammer, which is a reversal pattern in the NASDAQ. And on the S&P 500, we have what is called a piercing reversal on candlesticks. And for people who do not understand candlestick reversals, you can Google candlestick reversal patterns, all right? And just educate yourself on technical analysis. So we have reversals on the monthly charts, and on the daily charts, as I mentioned, look, the end of December is meant to be the most bullish period of the year. Most people have heard of the Santa Claus rally, and yet on the last 3 trading days of the year, we fell every single day, okay? And that just shows how weak this market is. And that is despite funds who do window dressing at the end of the year and try to prop up the market. So there's other institutional investors, obviously, who are getting out of the market as quickly as possible, okay? And that support is going to be all gone in January, and I expect a big dump in January, okay? So I can't give people sell recommendations directly, but I can say that, give you the trades that I've been doing, all right? So basically, I shorted the S&P 500 at 6,010 and NASDAQ 100 at 21,500. And I see at us basically falling rapidly in January and early February down to around the 17,000 level on the NASDAQ 100, which is give or take a few hundred points, okay? Minimum 17,700, which is the first Fibonacci retracement level of the entire run-up from 2022. People who know technical analysis will understand that. And possibly a few hundred points lower. And I will start, and basically that will take us into around bear market territory, just over 20%. And I expect that to be the first leg down on the NASDAQ 100. And if you look at the charts of the Dow when it crashed in 1929 and then the Nikkei in 1990 and then the dot-com bubble in 2000, there's always one, the first leg down, all right, which is the wave 1 for people into technical analysis. And then there will be a counter rally, a bounce that goes against the trend. And then when the economic data gets really bad, then we have the long, big ass fall. That's the wave 3. That's the biggest fall. And the data coming out, it's not just the technicals. The data coming out is already suggesting that the US economy is weakening rapidly because ISM manufacturing PMI, which measures basically the manufacturing and the industrial activity in the US, has already shrunk in December, okay? It was just over 48, and it has to be above 50 to be expanding. Below 50 is already contracting. And the data for the Chicago area, which came out after Christmas, was absolutely horrendous, all right? It was like well below 40. It was below the consensus estimate, which was already very, very low, okay? So manufacturing and industrial production is contracting very quickly in the US, all right? And although the service sector is a bigger part of the US economy, the fact that industrial production is going down shows that the demand for goods is already decreasing. So I wouldn't be surprised if the service industry goes into recession very quickly soon in the first half of next year as this tech bubble and the cryptocurrency bubble pops. Another indicator is basically the price of copper. Okay, so copper has been trading in what is called a wedge formation with narrower and narrower ranges, and it broke to the downside on the last trading day of the year, which is when I shorted it. So I waited for basically the Chinese data to come out for their industrial production, which was barely above 50, okay, barely expanding at 50.1, and the Chinese government has been introducing stimulus packages to try and prop up their economy, and yet industrial production isn't even expanding. So if there's a recession in the US, then Chinese data is definitely going to get bad as well. And copper tracks the the health of the economy very closely, probably even better than oil, because OPEC tries to have an input to control supply of oil. So copper is the most accurate predictor of economic performance. And as I said, copper just broke support to the downside on the last trading day. And I shorted copper at 4.09 on COMEX, all right, just like 4.0915 or something like that. And I'm going to keep my copper shorts as well, and I think copper shorts, shorting copper will be very, very lucrative. As it breaks down to the downside, the real key support level before it even bounces will be 3.27 on COMEX copper. Okay, that's a significant downside. And if we get a recession in the US, it'll probably break that support later on in the year as well. So how can investors make money out of this? All right. So again, I cannot give buy or sell recommendations, but if it was me, I would buy bonds. Okay, U.S. Treasury bonds. Okay, so somebody mentioned to me that they already bought bonds and they're getting or a bond fund and they're getting a yield of 3.5%, and they're saying, oh well, it's so little, not enough. Is there any other market that they can go into that can yield more? Well, first of all, let me just say that this just kind of shows how investors' expectations have just gone completely off the charts for expecting 20-30% returns every year, right? Which is not sustainable. And just not getting a 40 to 50% loss on a portfolio in a big bear market is reward enough, right? Just keeping that cash. But if anybody doesn't want to just have cash sitting in a cash account in the bank and getting very little interest, they can park it in US Treasury bonds. Okay, yields are still very attractive. So on the 2-year bond, it's like 4.2% or something like that. And that's guaranteed return, all right? The US government is not going to default in the next 2 years, although there's going to be some drama in January and February over the debt ceiling. As the market tanks, the US dollar will get stronger because people will be moving money into US Treasury bonds, and the US dollar is seen as a safe haven. So ironically, if the US economy goes into recession, the US dollar will get stronger, and that will pull down the price of gold and silver, which will create an attractive entry level for gold and silver. And as the US economy goes into recession, I expect the Fed to start cutting interest rates. So as interest rates go down, I think gold and silver will do very well in the second half of 2025. So first of all, they have to go down as the US dollar gets stronger. And then once that reverses, because the Fed is cutting rates aggressively, then gold and silver will start to go up, and I would be a buyer of gold and silver in the second half of 2025. All right, those are investing recommendations that as an investor, I would make. All right, buy bonds and buy gold and silver in the second half of 2025. And by bonds, I mean US Treasury bonds. Okay, the most stable ones, not corporate bonds, which are going to take a huge hit. Especially if a company goes out of business, then you can a bondholder will lose all their money, right? So, for traders, okay, again, I've shorted the S&P 500 and I've shorted the NASDAQ 100. Okay, at the beginning of January, there might be a 1 or 2 day bounce, which I would definitely sell into. Okay, if I was entering a new position, although I still have my old positions from December. And so basically I shorted the S&P 500 at 6,010 and NASDAQ 100 at 21,500. And again, I'll be targeting basically just over 20% down on the NASDAQ 100. Around 17,000 is my target, give or take a few hundred points, okay? When it gets close, when it gets to 17,700, I will start taking profit on a third of my shorts, which is the first Fibonacci retracement level, 38.2% of the entire run-up from 2022. Okay, again, people who are traders will understand what I'm talking about, and I expect it to go even further down. So I'm going to be locking my profits in tiers as the market goes down, and then I might even do some longs as the market tanks and the market gets really bearish and is oversold. And then there's always a wave 2 up, okay, a counter rally up in all these big bear markets, okay. We've seen that in basically all, like the Dow, and then also in the Nikkei and in the dot-com bubble. I might go long and play the bounce with a stop loss, and then once the wave 2 happens, I'll be making another video to explain at what point I think is a good entry point to, again, short the market for the biggest wave down, which is the wave 3. Okay, the second full wave is called the wave 3. And the other really attractive trade, in my opinion, is shorting copper. Okay, again, I've just mentioned that copper has just broken this wedge formation. And wedge formations are one of the easiest formations to trade when they break to one side up or down, because as the range shrinks on these wedge formations, it's basically showing, okay, so charts are just basically a graphical representation of buying and selling pressure. And as the wedge shrinks, then buyers and sellers basically, the buying and selling pressure is compressed like a spring. And when one side wins, then it will shoot in that direction very aggressively. So in copper, before, in 2023, there was a shoot up, or was it earlier in 2024? There's a big shoot up, melt up on copper, big rally after the wedge was broken to the upside, and basically all the short sellers go into a loss and they have to cover their short positions, creating more buying pressure, and obviously more buyers come in and the market just goes aggressively up. And this time around on copper, as it breaks to the downside, all the buyers will be in the loss and have to cut their positions, all right? And on the copper forums, I mean, like, most of the guys are just super bullish on copper. I don't understand why, because the Chinese economy is so weak. And it just shows basically how the retail investors are positioned. And as a trader, you always want to go against the majority of the retail traders, okay? The more bullish people are, just like with cryptocurrencies and with tech stocks, at the late stages, definitely, you want to go against all of them, all right? Because they're all going to be caught on the wrong side of the market. And that's how people can make money in 2025 and 2026, to go against the crowd, all right? You don't want to be with the crowd, and you do the exact opposite of what everyone else is doing, right? So now that everyone's still really super bullish about crypto and tech stocks, for the traders out there, definitely I would be shorting, which I've already done, all right? So my positions now is short S&P 500 at 6,010, short NASDAQ 100 at 21,500, and short copper at 4.0915 on COMEX copper. And let's see how those trades pan out. Now, for those of you out there who are watching this video and still think that I am full of crap, as I mentioned, the market action in December has already indicated downside, and the economic data is already getting worse. If you don't believe me, make sure to at least follow this channel and see how the price action in January pans out. And if there's an absolute slaughter of the market and the market tanks really badly, get back to this channel. I'm just trying to give people information on trading ideas so that they can make more money, okay? Whether you agree with me or not, knowledge is power, okay? So anyway, I hope everyone makes money still in 2025 and 2026, but that, in my opinion, will not happen for people who just insist on holding on to their stocks and their portfolios, okay? They're definitely gonna take a huge hit to their assets, all right? My opinion only. Could be wrong, but if I am right, make sure to come and revisit this channel and the videos that I'll be making over the next 18 months.